Welcome everybody, and in this lecture we'll discuss about assessment of partnership firms. Now why this lecture becomes important for this year? Because there is an amendment. So after long time you would have seen an amendment in this topic. So that's why this lecture is super important, and in the examination we can expect a question. So listen to this lecture carefully so that when you practice the problems, you get that ultimate confidence. Okay. Now, first thing, देखो generally we discuss Indian Partnership Act 1932. In that what we say, all partners come together is called as partnership firm. Jointly all the partners are called as partnership firm. That means partnership firm has no separate entity under the Indian Partnership Act 1932. But it's not the case in case of income tax. Income tax says partnership firm has a separate entity. So that means partner is a different entity and the partnership firm is a different entity. This you should remember. Now what income tax department do is issuing a PAN card in the name of the firm so that a current account can be opened. So this way what happens is partnership firm gets a independent entity in the eyes of income tax. Second point, generally partnership firm also includes limited liability partnership. So if you say firm, you should also mean firm under the Indian Partnership Act 1932 and the limited liability partnership under the LLP Act 2008. Both are covered, right? But suppose if it is specifically excluded that LLP should not be considered as firm in some section or some provision, then LLP should not be counted. Like I'll tell you, just now, last lectures you would have heard, in that section 40 AD I discussed. In that section 40 AD, I said individual partnership firm, I said. When I said partnership firm there, excluding LLP, we use the words. That means under section 44 AD, partnership do not include LLP. So generally partnership includes LLP, but if it is specifically excluded by particular section, there partnership firm do not include LLP. So we should be careful while reading each and every provision. Okay, clear. Now I want to ask you, what is the rate of tax for partnership firm? 30% is the rate of tax. What is the amount of surcharge? Surcharge is basically if income is up to 1 crore, there is no surcharge at all. If income is more than 1 crore, 12% surcharge is applicable. Health and education says 4% is commonly applicable to partnership firms. Now, once we understood the rates, once we understood the nature, now let me tell you about partnership firm that partnership firm, any income which the partnership firm earns is taxable, whether it may be from the business income, house property income, or it may be from business capital gain income, it may be income from other sources. All types of incomes are taxable in the hands of partnership firm. Okay, very good. But salary, no. Why? The firm cannot join as an employee, correct? So that's why firm cannot get salary. So firm's income is not taxed under salary chapter, right? But all other four heads, yes. Now registration of partnership firms, is it compulsory? If I ask you a question, the answer is no. Even if the firm is not registered under Indian Partnership Act 1932, still it is treated as firm under income tax for the purposes of assessment. What I have to tell you one more thing, that देखो, when firm earns income, firm's income is taxable. Now the same profit, when it is distributed amongst the partners, should it be taxed again? That's what point number 2 talks about. It says share of the profit earned by the partner from the firm is not taxable in the hands of the partner. Why? Because already firm paid tax on it. And can you ask two entities to pay tax on the same income? Not possible, right? That's why the firm's income is taxable in the hands of firm, and when it is distributed to partners, it is not taxable in the hands of such partner. Now, we understood certain points that partnership firm is a separate entity. Partnership firm generally includes LLP, but if it is specifically excluded like section 44 AD, then firm don't include LLP. Share of partner is basically from the firm, not taxable in the hands of partner. Partnership firm will pay tax on four heads of income, that is house property, PGBP, capital gain, other sources. Salary chapter firm don't earn salary income, right? Registration is not a mandatory thing, right? Now, deductions which are available to the partnership firm, they are given under section 44B. Remember, when you compute the income of partnership firm, all the sections, whether it is section 28 to section 44, all sections are applicable, no doubt about it. But apart from that sections, section 40B deductions are available. So what 40B deductions talk about? Interest to a partner. So whatever interest is paid, right, to the partner by the firm, that interest is considered, right? Second one, remuneration to the partner, right? That is also an expenditure. So basically, firm is paying interest, firm is paying remuneration. These two are expenditures for firm, correct? So that's why they are deductible under section 40B. But if things would have been so easy, then I would have not been teaching, you would have not been hearing, correct? Because section 40B involves two more sections, and that is section 184 and section 185. Section 185 says, it's Gunda type of section. It says, if you want to claim 40B deductions, then you have to satisfy conditions given under section 184. Now 184 says, okay, shall I tell the sections? Shall I tell the conditions? Section 184 says, shall I tell the conditions? And the conditions are here. First condition, the partnership should be evidenced by an instrument. Now you may be saying, sir, just now you said registration is not required. Now you are telling evidenced by instrument. What is this? Listen carefully. I said registration under Partnership Act 1932 not required. But at least some partnership agreement should be there, na? That's why partnership should be evidenced by an instrument, I said. Then certified copies. Certified means obviously certified by a chartered accountant. Okay. Certified copies of the instrument should be accompanied along with the return of income. So when you file the income tax return, at that time, not only your income tax return, but also your partnership agreement copy or partnership instrument or partnership deed, that should be accompanied with the return when you file the return, when the firm files the return for the first time. Okay. And third point is that share of the partner should be specific. Like when you do partnership problems in your intermediate and degree, what you do? Partner share is 3:2:1. Like that we study or not? So share should be specified. And the last thing, under section 144, best judgment assessment, you should have not done any default. So under section 184, four conditions are laid down. That partnership should be evidenced by an instrument. So there should be partnership agreement. That's it. Second thing, certified copy, certified by a chartered accountant, should be accompanied along with filing of returns for the first time by the firm. Yes or no? So when you file income tax returns for the first time, also add not only the return copy, but also submit the partnership deed. That's it. And the third thing, share of partnership, right? The partners share should be specified, specific it should be. Like I said, 3:2:1. It should be something, but it should be clear, right? So what is the share of profit? We don't know. Such type of situation should not be there. And there should be no failure under section 144. If assessing officer want to ask you, right, what is your income, you should be able to properly answer. If you satisfy these four conditions, then you can claim the deduction of interest and remuneration under section 40B. But if suppose you fail these conditions, then 185 comes into picture. And 185 says, if you did not satisfy 184 conditions, no deduction of interest, no deduction of remuneration, not allowed, that's it. Like that, section 185 says. So that means if you have actually deducted interest, if you have deducted remuneration, you should add it back completely, right? Because 185 says if you don't satisfy the conditions of 184, then the deduction of interest or remuneration not allowed. So if you deducted, then add it back. If you are not deducted, then you cannot deduct. Like that, you should remember section 185. Now it says something, it's okay. But now we have to further deep dive and discuss about interest and remuneration one after the other. First, let us talk about interest. So interest may be interest on capital. Partner invested money into the firm, we call it as capital. And sometimes partner give loan, we call it as advance. So interest can be on capital, interest can be on advance. Both are deductible. Okay, no doubt. But for that, they should satisfy certain conditions. What are that conditions? Come on, listen to me carefully. The interest should be authorized by the deed. So that means when you create a partnership deed, in that you will write down terms and conditions of the agreement, yes or no? In that terms and conditions, you should write that interest on capital is payable to the partners. Such terms should be written or not. So that means if it is written, if such terms are written in the deed, that means the interest on capital is authorized by the deed. Now, if you have to pay interest to the partners, you should pay after the date of the deed, or the payment can be made even before the date of the deed. The answer is the payment should be done only after the date of the deed. That means, now remember, we are talking about interest. Interest on capital or interest on advances. Second thing, you should satisfy certain conditions. First is the interest should be authorized by the deed. Second is that the payment of interest should be done after you sign the partnership agreement, right? After the date of the deed. If you satisfy these two, then you can claim the deduction. But we understood we can claim deduction. But how much? That is answered just now. Listen carefully. What I said, either 12% per annum or A point you see, actual interest which is not more than the amount or interest rate specified in the deed. So sometimes what happens in the questions, they will give actual interest paid to partners, then they will say give interest as per the deed. Now if they give two things, you will get confused. So what you should do? You first see what is actual interest and what is given as per deed. You take whichever is lower. Once you get that, compare that with 12%. Then decide whichever is lower. This way, you have to actually allow the interest from the partnership firm, or claiming interest by the partnership firm can be allowed to this limit. Now suppose up to 12% is allowed, but actually when we see the books of accounts, 15% is paid. Then what to do with that extra? That excess is disallowed under section 40A subsection 2. That means the 3% cannot be deducted. But they already deducted. Okay, then add it back. Okay, so when we do the problems, that excess interest is added back generally. Okay, this way you should remember. So what did you learn in interest? Simple. Interest on capital or interest on loan is allowed as deduction. Only if you satisfy the two conditions. First is it should be as per the deed. Second is the payment of interest should be after the date of the deed. Now come to the third point, the deduction amount. What is the deduction? Actual interest which is up to the amount of permission which is given in the deed. That means the rate allowed in the deed, not more than that. And second point is 12%, whichever is lower. And finally, once you claim the deduction, you check the question. If excess interest is paid, add back. That excess only add back, not total. Only excess should be added back. That's why when I said in the question, if they give 15% interest paid to partner, we added only 3% back. Okay, like this you should remember. Now suppose they have a partner who is just a representative partner. Now, are there such concepts existing today? The answer is yes. Suppose example, think about if a governor of a state or a president of a country is a partner in a partnership firm. Now, can he come and attend the meeting? Practically possible? The answer is no, because there are lot of security protocols. So it is difficult for them to attend the meetings. It will create chaos. Sometimes rich businessmen are there who have multiple businesses. Now they cannot attend every meeting of a firm. So they appoint representative partners. So on behalf of them, one person attends the meeting and we call him as representative partner. Okay, clear till this point? Now, what about applicability of section 40B in case of representative partner? So let's understand. If suppose governed by section 40B and another word is not governed by section 40B. Let me merge both and explain to you. Suppose example, if the partner is there, actual partner is there, right, in the firm, who is actively working, who is representing the governor, representing the president, representing any businessman or any other person, but he is actually involved in the business. Such representative partner, section 40B applies, right? And to the person represented, to that person also, section 40B applies. Okay, very good. Now, suppose example, interest is paid. Okay, interest is paid by the firm to somebody, but that somebody appointed a representative to collect the interest or do the calculation or do the liaisoning, all that. But that representative is not the partner. Then section 40B doesn't apply, because section 40B will apply if somebody is a partner. If somebody is not a partner, then obviously section 36 applies. You remember section 36 talks about interest on borrowed capital, right? So interest on borrowed capital, that section will apply, right? Not 40B. So clear? If the representative partner is acting as a partner, then definitely 40B applies. If not, the representative is not a partner, then section 36 applies, not section 40B. Like this, we are supposed to remember each and every point. Now let's come to interest on drawings. Obviously, if partners draw capital, they pay some interest to the firm, then for firm it is income. It is credited to the P&L account as income and recognized while filing the income tax return as income. So there is no doubt about it. Okay, very simple provision. Now, remuneration to partner. Here is the actual amendment which we are going to discuss. Okay, so remuneration means what? We generally think remuneration means salary only. But remuneration can be salary, can be fees, can be commission, can be bonus, can be all of this together or some of this together. So whenever in a question they give salary to partner, fees to partner, commission to partner, bonus to partner. Till now we don't have any such question in CMA books. But still, if they give like that, then add all this and say this is remuneration amount. Okay. Now remuneration is clear. Salary, bonus, commission, fees is remuneration. Okay. Is this remuneration allowed as deduction? The answer is yes, if you satisfy three conditions. Two are similar to interest. The third one is new. Because remuneration can be given to whom? If somebody is a sleeping partner, will we give remuneration to him? For sleeping, you are getting salary. It's not possible, correct? So that's why remuneration is paid to working partners only. Remuneration is paid to whom? Only working partner. That's it. Okay. Remuneration, how much should be paid? Remuneration should be paid as per the deed, as authorized by the deed. Okay. When it should be paid? After the remuneration payment should be made only after the date of the deed. So we understood three conditions. One, remuneration should be paid to working partner. Second, remuneration should be paid as per the deed. And third, remuneration should be paid only after the date of the deed. Now, if three conditions are satisfied, then remuneration is allowed. Now, I'll ask you a simple question. Okay? Only three conditions? The answer is no. That 184 four conditions should be satisfied plus these three conditions satisfied. In case of interest also, 184 four conditions should be satisfied plus interest related that two conditions should be satisfied. Right? Don't get confused. Right? We have to understand completely, clearly. That's how you will get marks, right? Okay. Let's continue with the discussion. So if you satisfy 184 conditions and then satisfy this part, that working partner should be there, authorized by the deed, only after the date of the deed, the payment is done. That's it. Then how much remuneration should be allowed as deduction is the next question. The answer is the actual remuneration paid by the firm or the maximum permissible limit as per section 40B. What are the two things I said? Least of the following two, minimum of the following two is allowed as deduction. What are the two? First one, actual remuneration. Second one, maximum permissible limit. These are the two things. Okay, that's it. Okay, you understood that actual permissible limit. Oh, actual remuneration paid to partners. Second one, maximum permissible limit. Out of the two, whichever is lower is allowed as deduction. But where actual remuneration is given? When you see the P&L account or you see the adjustments in the question, you will get the salary paid to partners. So that is point number A, actual remuneration. Then what is the maximum permissible limit? That I will tell now. Let's see. Suppose example, you got loss. You do business, that means you get sometimes loss, sometimes you get profit. So suppose you got the loss. Then maximum salary to be paid to partners is 3 lakhs rupees. Okay. In case of loss, maximum salary payable to partners is how much? 3 lakhs rupees. Now, is it to a single partner? Each partner 3 lakhs? The answer is no. All partners together max 3 lakhs. Okay, done. But suppose example, you got profit. In that case, up to first 6 lakhs profit, the treatment is different. And surplus after 6 lakhs, if additional profit is there, for that the treatment is different. Shall we understand? Suppose example, you got around 15 lakhs profit. So for the first 6 lakhs, what happens? That 90% of the 6 lakhs, or I can say 90% of the book profit, or rupees 3 lakhs, whichever is higher. Now because here 15 lakhs is the profit, so you can take 6 lakhs here. 6 lakhs into 90% comes to 5 lakhs 40,000. 5 lakhs 40,000 or 3 lakhs, whichever is higher. So in that case, obviously 5 lakh 40,000 is allowable remuneration. But if you think it's over, then you are not focusing. Come on. I said above 6 lakhs, 60% of the book profit I said. So above 6 lakhs, how much profit? I said total profit is 15 lakhs. So 15 lakhs minus 6 lakhs if you do, you will get how much? 9 lakhs rupees. 15 lakhs minus 6 lakhs, you will get 15 lakhs minus 6 lakhs, you get 9 lakhs rupees. 9 lakhs into 60%. How much you will get? 9 lakhs into 60%. How much you will get? For each lakh, you will get 60,000. For 10 lakhs, you will get 6 lakhs. Correct? So for 9 lakhs into 60%, 5 lakhs 40,000 comes. Now, by matching, actually, it reached 5 lakh 40 in the first case, 5 lakh 40 in the second case. So both the things together will reach to 10 lakhs 80,000. Okay, this is your maximum remuneration allowed. Suppose in the question they give book profit to be 20 lakhs. Don't worry, first 6 lakhs would be obviously 5 lakh 40. It will not change, correct? Because 6 lakhs into 90% is 5 lakh 40 or 3 lakhs, whichever is higher, 5 lakh 40 is same. But further, how much is surplus? 6 lakhs to 20 lakhs. Difference is 14 lakhs. Correct? 20 minus 6, 14 lakhs. 14 lakhs into 60%, how much it will come to? 8 lakhs 40,000. Correct? So that's why it will not be matching. Right? So 8 lakh 40,000 plus 5 lakhs 40,000. When you total it, you will get 13 lakhs 80,000. So this way you have to compute the maximum remuneration allowed. Okay. But the keyword here you did not understand. What is the keyword? As a percentage of book profit, they said. Did they tell you business income? No. They said as a percentage of book profit. Then what is this book profit? I don't know. I did not hear for the till now. I am here to teach you. Just see 4 steps now. Right? First step for computing the book profit is take the net profit as per P&L account. Sir, for business income computation also we do the same. Absolutely right. For that also we do the same. But here when it comes to partnership firm, we'll first compute book profit, then compute the remuneration, then compute your business income. Okay? These 3 steps we follow. But let's first understand this book profit. Okay? First step. How we'll do? We'll take section 28 to section 44. Any adjustments to net profit we have to do, let us do. Okay? So first step is clear. We'll take net profit as per P&L account. Second step is clear. Section 28 to section 44 adjustments. Whatever add less has to be done, we'll do. Okay? Third thing to remember. That excess interest should be added back. What I said? Excess interest should be added back. So whatever is permissible interest, no problem. Beyond permissible interest level, if interest is paid, that interest should be added back. And third point also says entire remuneration should be added back. That means if remuneration is given to P&L account, directly see the numbers, directly add it. Okay, same numbers should be added back without any adjustment. So 3 steps are clear to you, right? First, take P&L account profit. Second, adjust as per section 28 to section 44, as we discussed in all these lectures till now. right? And third thing, that you have to add excess interest and entire remuneration. But if it is just this much, how can we call this subject as income tax? There is further fourth step. Fourth step is very simple. You have to deduct unabsorbed depreciation. You should not deduct any brought forward losses. Only unabsorbed depreciation should be deducted. And once you deduct unabsorbed depreciation, you get the book profit. Right? This is how you should do. But while deducting the unabsorbed depreciation also, please remember that after deducting unabsorbed depreciation, how much is the book profit? Check. Is it below brought forward business loss? Check. If yes, then unabsorbed depreciation is not deductible. That means you can deduct unabsorbed depreciation only to that extent where book profit is not less than brought forward loss. Right? Book profit can be equal to brought forward loss. Book profit can be more than brought forward loss. But book profit should not go below the brought forward loss. That's the condition. Okay? Right. So what will you do? You will do all these three steps. Compute the gross book profit in simple language for you to understand. Then you actually write the unabsorbed depreciation word. Don't write the number. Write the word. And then just orally do the calculation. See if book profit is going below brought forward loss or not. If it is not going below brought forward loss, then write the unabsorbed depreciation as it is. Right? If suppose example, if unabsorbed depreciation is so much that book profit is going below brought forward loss, then I'll give a simple solution. Right? Gross book profit minus unabsorbed depreciation is equal to brought forward loss. Okay? In that case, what happens? The difference between the two will become unabsorbed depreciation. Okay? We'll understand this much more while we solve the numerical problem. Okay? But for the time being, you remember that we can deduct unabsorbed depreciation. But we cannot deduct brought forward loss. But ensure that after deducting unabsorbed depreciation, your book profit should not go below the brought forward loss. That means book profit can be equal to brought forward loss or more than brought forward loss, but not less than brought forward loss. All four steps completed. Now let's continue with the last 2 minutes lecture, and that is how it will affect the partner's income computation. Okay, let me tell you, to understand the partner's income computation, let's understand how the firm's income computation is done. First, book profit is computed, as I said. Then maximum remuneration is computed, as I taught just above it. And after that, you will actually take your total income computation. What is total income computation? You take gross book profit. That means book profit before unabsorbed depreciation. And then deduct the remuneration. Then deduct the remuneration. How much? Which is maximum permitted. And after deducting it, you will get the total income. Because all other adjustments of section 28 to 44 are done while computing book profit itself. So why will you again do? Correct? So only remuneration is deducted. But when you compute the total income, don't take book profit minus remuneration total income. No, this is wrong. Take gross book profit, that is book profit before unabsorbed depreciation, right? Minus remuneration, you will get total income. If there is brought forward business loss, you deduct that. That's fine. Okay. And if profits are still sufficient, then deduct unabsorbed depreciation also to get the total income. Okay. That's it for computing the basically partnership firm's income. But what about partner's share of profit? It is fully exempt, I said na, right? It is taxable to the firm. That means share of profit to the partner is fully exempt. Then what about interest to partner? What about remuneration to partner? The answer is, if something is deductible for the firm, if something is expenditure for the firm as per income tax, like I said, interest up to 12% can be deducted, I said. So up to 12% interest is deductible to the firm. That means it is taxable to the partner. If maximum remuneration is deductible to the firm, then it becomes taxable to the partner. This way you should understand. Now when we compute the partner's income, we'll write share of income from the firm nil nil nil. Remuneration is maximum remuneration as per section 40B. That also will write interest which is deductible up to 12% or within the limit which is deducted there, and we'll compute the partner's income also. Like this you should understand the topic because it's an amendment. So that's super important for all of you. Okay. Chal. We'll meet in the next video solving the problems on this. Till then, take care. Bye, everybody.